Hey, good morning. Can you guys hear me? Thanks, Andrea. So guys, let's give a couple more minutes for people to join. All right, guys, let's get started. So firstly, I apologize for my voice. I got tested positive for COVID 2 days back. So I'm doing well, but it's just my voice hasn't recovered yet. So I apologize for that. We are a much smaller group than what we were last night. So for people who are not aware, we did a similar session last night, 6 p.m. UK time. We had more than 35 people. It was a pretty interesting conversation happening not only by voice but also by chat. So it was quite tricky, but it was fun, and it lasted more than 2 hours, which was crazy. Hopefully, we'll do it much faster this time. So we're going to make it interactive. So everyone has the option to unmute and speak. If you want to share anything in chat, you can do that. Just make sure you select all panelists and all attendees at the bottom so everyone can see. And yeah, let's make it interactive. So to start with, for people who are not aware, my idea here is not to give a speech. It's a community. So, you get, similar to what you give, if that makes sense. So the more you can share, people will share back with you. And I think that's how we can learn. We are not investment advisors. We're not trying to touch your money. You manage all of that. It's just a community. We just discuss and you decide what you want to do with your capital. Everyone can hear me fine? Someone wants to say, just also test that things work. Yeah.
Yep.
Okay, brilliant. So we are a fairly fast growing community now. This is an older screenshot, but we've got 7,000 people now across 5 countries, which is great. And outside of these webinars, people also chat over emails and WhatsApp and everything else. So it's a pretty lively group. If you wanted access to any of the older presentations, they are on our website, so cityfalcon.com/meetup. You can download also previous recordings of the webinar. And I will put up the recording of this webinar also. If you want to listen to last night's webinar, which I said was pretty interesting, with a lot of different views from a lot of participants. So feel free to download it. So, something that we are happy about is in 2020, we discussed a lot of Slack, and several people bought it. The whole point was that Slack's a great company, a great product. Microsoft Teams was not even close in terms of performance, and it just got picked up, and some of the members made up to 75% return. And 75% return doesn't sound a lot given what has happened in 2020. I think the difference is that what you're seeing is on a fundamental basis. You made 75% compared to a lot of the price action and stimulus action that you're seeing for other things. Of course, the price may have been lower if there was no stimulus or the markets were weak. But in general, something to be happy about when you do your research, and that works out well. Anyone on the call had Slack, made money? Anyone of this smaller group? I guess no. Okay. So this is something we shared last time as well, but I just want to kind of bring it out again because the story remains the same. So on 1st of May 2020, Elon Musk said, hey, the stock price is too high. And Elon Musk is usually pretty candid about these things. And the price then was, $140. When I took the screenshot last month, it was, $600. Right now it's close to $850. Now, if you think about what has just happened is from May to Jan now, right? So 7-8 months, a massive jump. Now, on a fundamental basis, you would ask, what is it that triggered this jump, right? What happened here? So one thing is, okay, S&P 500, not sorry, Tesla got added to S&P 500, which means that if you are an index tracker, if you're an S&P 500 tracker, you need to buy Tesla. And so obviously that jump came in. The numbers, I think, were better in terms of profitability, but it was all kind of expected. It was not something, okay, maybe a little bit of outperformance, but not to justify a 7x move in the numbers. Anyone has Tesla here or any thoughts on what's going on, their view? Okay. Yeah, and if you guys are very new, if I'm saying something it doesn't make sense, please stop me and ask questions. Okay, so there's something that I mean, because I run a fintech company and we track what people are saying about the markets, the sentiment, all of that. Okay, that's fine. So Andrea mentioned that she's at work, so she cannot talk. That's fine. So if you look at what is going on in the markets, if we follow what people are doing, it kind of reminds me, and maybe just because I'm pretty old in the stock markets, I've been in the stock markets for 20 years, and it reminds me a bit of 1999, wherein everyone's talking about stocks. Everyone thinks that stock prices never fall. And, if you had some cash, might as well put it in the market for 1 week, 1 month, double, triple your money, and then buy a car or do whatever you want. And you're seeing that euphoria now. Is anyone else seeing this in the markets? We had a discussion last night about taxi. You sit in a taxi and everyone's talking about this, or people who've never invested in the markets are now looking at markets. And any thoughts from anyone?
Hi, yeah, I've definitely seen that with a lot of some of my friends who, like you said, have never been interested in investing before, who've recently signed up to things like eToro, Free Trade. There's a lot of these trading platforms that they're using, and all of a sudden we're very interested in Tesla, crypto, the electric vehicle trends and stuff like that. So I definitely feel a lot more people are talking about the stock market than I've ever had before.
Yeah, and then exactly what we are seeing as well. And I think there's a kind of a sad joke that asset managers say, which is the time to get out is when retail investors get in. So they book their profits and wait for the next fall. So yeah, so we are seeing that, which is scary. And typically, if anyone remembers 1999, the last leg of the rally is always steep, and there is no way that anyone can time this market. There is another meme. I mean, it's untrue, but it's kind of the things that people are sharing. And so, why just use the stimulus check for your family? Why not just put it in stocks and then use that? Yeah. Another kind of a joke that is circulating within the finance community is, a bank fired a trader for using the F word on the trading floor. And the F word is fundamentals, right? Why should we care about the fundamentals? Just focus on the price. It's going up, keep buying. You'll make a lot of money. So it's a bit scary. And of course, at the same time, a lot of people don't want to be left out. And so they jump in, and we're going to talk about that very soon. So in terms of 2020, if we were to look at, the asset class performances, and the way to read this graph is that on the left where you see the negative value, it's how low it went in 2020. And this is probably around February, March when the, when the lockdown started. And then the green one, the light green one, is about the return in 2020 from Jan to December. And then this portion is kind of saying, what if you'd have bought in the lows in Feb and March? And you see everything is, everything is green, which is kind of counterintuitive in terms of asset classes. If you think, where you might say, okay, the performance sometimes between gold and stocks is inverse, which is why you invest in both, so you diversify a portfolio. But yet everything is going up, right? So you would have made money literally as long as you didn't hold money in cash. So, okay, not completely true, because some sectors suffered, and we'll talk about those sectors, but it's in general, you would have made money. And so oil, of course, the craziness that happened in April 2020 when oil was trading as minus 38 or minus $40. And from those prices, it's obviously seen a phenomenal jump after that. Any thoughts? Anyone's bought any of these things recently, made money? Anyone unlucky to invest in something that actually didn't make money in 2020?
Do you know, I've always sort of held oil. Well, not directly, just oil companies. So they've at the moment aren't doing too well. But I did make some money with Royal Dutch. I haven't sold yet, to be honest with you. But I invested in Royal Dutch Shell when they had quite a massive drop last year. So that's sort of benefited from the recent increase anyway.
Yeah. No, it's a sector that you could look at depending on whatever your long-term view is. Yeah.
I think Rusbeh also, there's also been a lot of talk about gold and silver recently as well. I haven't invested, but yeah, I'd be keen to know if anyone has, because that's been on a lot of platforms and stuff at the moment.
Yes, and then there's of course the debate between gold, Bitcoin. I mean, I personally do not invest in gold because I think there are other assets to make your money work. But I can see why people invest better than holding cash, especially when central banks are printing money. But the risk here is also that gold can fall, quite a bit as well. We've seen the prices go to, $1,100. It's close to 2,000 now. So there's risk involved as well. But anyone else wants to talk about gold, silver? Okay. Anyone looking at bonds, maybe? Oh, by the way, Andrea said that, they made an issue with, they lost some money with oil. Yeah, it was a tough find. I mean, oil is always really difficult to play with because of the monthly cycles. And then you have to take delivery or give delivery in physical form. So it's always tricky to manage. I actually lost some money because I was long oil when it was something like $20, and then I squared it off when it was 18 because I was like, why is it? And that was the same contract that went to minus 40, so I was quite lucky that I got out of it. bonds, anyone made money? So I made some money last year. So I didn't put money in equity because for me, the markets were overvalued, and I run an early stage company, so I don't have a lot of disposable income. So I have to make sure I have money for my rent, and all my equities in my company. So that's how my wealth is. But I did invest in bonds, and got a decent return there. So it was relatively low risk for now. So it was good. One of the other sectors that I'm looking at researching. So I've never been,
Rusbeh,
yeah.
sorry, just a quick question. In terms of investing in bonds, what type of value of investments are we talking generally? I've always associated that with large investment kind of unit prices.
So yes, but sorry, I should have mentioned when I say bonds, I didn't buy bonds directly. I bought mutual funds that invest in bonds.
Ah, okay.
Yeah. So that's how I did. But you're right. I mean, bonds are a bit tricky also to manage because, you have to think about a lot of things, interest rate and when it expires and all of those things.
And are they held, like, is it long term you're holding these bonds for, these mutual funds? Are they long term or not?
So my strategy with bonds is that, and I've done this over the last 20 years. So when I think that interest rates are going down, okay, I would just buy bonds. And what happens is when interest rates goes down, bond prices go up. And I remember some years the interest rates have gone down so quickly that I made like 100% return on bonds, which was like a phenomenal year. You don't see
Okay.
that. And again, I diversify across the world. So it's not just US, UK. I take a lot of exposure in India, which is where I'm originally from, where interest rates are still relatively high. So when the interest rates go down, I keep on buying. And then as soon as I see that the cycle's going to turn and interest rates are going to go up, that's the time I sell bonds and I move to other asset classes or move to cash.
Sure.
So it's typically 4 to 5 years cycle is what I use for
Right.
bonds.
Okay. Thanks,
Yeah.
Rusbeh. Helpful.
No worries. But I mean, I have like in a pension fund, I have some mutual funds that I have and I wouldn't touch them. I wouldn't kind of keep playing with them. Yeah, I mean, with equities, it's it's just that I have some companies that have gone completely bankrupt in the last recession, so it's quite risky. So I needed some stability. Okay, let's move on. So in terms of 2020, the sectors that did well, um, IT, as we know, of course, everything from Apple, Tesla, everything going up. Consumer discretionary, and we had a discussion around this yesterday, right? Like if you think about consumer discretionary, it's not only um, the the physical stores that we're talking about where people go and buy stuff, but it's also online. And yes, we've seen a lot of online purchases with Amazon doing extremely well. The physical sector has suffered quite a bit. Uh, but still, companies have gone up. So Apple, for example, yes, they've sold more iPhones last year, but does it justify the $2.2 trillion dollar valuation that they have today? Are they going to sell so many more iPhones when people don't have jobs, when the economy is struggling? So these are kind of things. And on the bottom, I mean, we spoke about this. I think Olu mentioned about energy. So that was the big loss. And energy is of course complicated with a lot of stuff happening on renewable energy, green energy. Some countries saying they're not going to drill anymore for oil. So you'll have to really pick do a lot of research before you enter. Real estate, I've never been someone who buys property. It's not a market I want to play with because I think it's quite unorganized and unstable. But I am interested now to see if there are any real estate plays that have been affected by COVID, and can survive the downturn. And then when the upturn comes, they could do well. So I'm looking at whether I could buy an ETF. I might look at a global coverage ETF to kind of have exposure to real estate. So nothing. Research is not done, but something I'm looking at. Yeah. And any thoughts from anyone? Any sectors that people are looking at?
Higher again. I made a looking as well at real estate, especially at some of these sort of warehouses, distribution warehouses. I think they're called big box warehouses or stuff like that, which look like it might be interesting if online commerce does expand, and logistics, and people need more and more space to store goods. So I think one of them is called Big Box Tritix, where they're like a real estate investment trust, for example, who invest in large warehouses, distribution warehouses. So that's just interesting that you're considering similar sort of thing as well.
Agreed. And Olu, have you looked at any of these balance sheets? Do you think they have like money to run through this downturn, to survive this downturn?
Yeah. So the one I was looking at in particular, I believe they're called Big Box Tritex. They looked they looked quite stable actually. And their tenants who they have are still paying, because most of their tenants are online companies, some of the larger ones as well. So their tenants are still paying, they're still collecting rents from their tenants, and they're looking at expanding. So their balance sheets looked quite stable. I can't remember off the top of my head any figures, but
Sure.
I wasn't worried looking at the balance sheet at all.
Cool. Good to know. I'll have a look as well. Thanks. Andrea mentioned about space. Yeah, Virgin Galactic and SpaceX. Yeah, they are popular. I guess the challenge is going to be the price at which you get in, and then there's obviously a lot of uncertainty. But if it's a sector that excites you, yeah, why not? Yeah. So in terms of performance, obviously Tesla did a 7x jump, which is crazy for the stock. You see a lot of technology doing extremely well. When I remember Nvidia doing 10x, a couple of years back. I think AMD also did something like 10x, and that was the crypto boom. But technology is still kind of outperforming the markets. And I think with this, the technology, a lot of people have been trying to justify. So typically how things should work in the markets is that, the price moves up based on some kind of justification, right? So, okay, Nvidia is going to be in crypto, so they're going to sell so many more, chips, and this is why they will make this much money, and this is what the price should be. And now it's the opposite. The price moves first, and then people are trying to justify if that price is fair or not. So when you look at some of the analyst reports, they're like, hey, yes, tech should do well because the marginal cost of tech is very low. So, when Facebook sells an ad, they don't have any cost against this. So yes, it should have a higher earnings multiple. But the point is that we knew this for the last 20 years. And so people are just finding reasons to justify, and we'll see some examples of this, which again kind of is extremely scary to see at this point, something going back to 1999. So Apple, 2.2 trillion, it's crazy. I mean, if you think about it, and if the central banks look at, how their money is being used to inflate the asset prices, it's, no words. But I mean, if you look at the stock, it's done like 80% annual return for a stock this big, this big. So quite interesting, and this hasn't been reflected by either a jump in revenue or iPhones, or maybe they have a car by 2025, a beta version, but it's still difficult to justify. Bitcoin, of course, and Bitcoin can be a religion, so I don't want to take sides about but it's just that the way it's moved, again, the numbers are crazy, right? From 20,000 to 40,000, and it's it's bringing on this people, who believe that the price will go to 200K, and there is very low risk, which is fine if you believe in all of those things, but I think what people miss out is the risk management. So yes, everyone likes to gamble, speculate, whatever you want to do, but with a small percentage of the money. So while the big funds are putting in small amount of money because, it's only 600 billion market caps, it's smaller than even Tesla. But the problem is retail audiences are leveraging themselves, putting big numbers into the currency, which is scary. So I don't know if you saw, but FCA in the UK has banned retail investors from using spread betting or CFDs, any kind of speculative derivative instruments on crypto, and also come out with a note saying retail investors should realize that they could lose all of their money in cryptos. And I think right now, what is happening is, while 5 years back or 10 years back, you wouldn't work with a trader that is not FCA approved. Today, people are just ignoring guidances from the regulator. And I'm not a fan of regulator. But I would rather listen to them than, an average retail person on the street who is speculating. So it's quite scary times with this, with what is going on. And I hope people make money. I'm in Malta, so, everyone talks crypto, and I'm always worried that I'll be stabbed if I say anything against crypto. So I try and keep my mouth shut. But it's also, just to kind of elaborate also, what we discussed earlier about sitting in a taxi and talking about stocks. I'm in the gym these days, and this is the topic in the locker room. It's stocks and crypto. What are you buying? Which is crazy. I'll take a pause. I've been speaking a lot. Anyone, any thoughts, any questions on any of what we've discussed?
Hey, Rosebud, yeah, just to sort of echo your sentiment. I mean, the last 2 to 3 weeks for me, I was literally banging my head against the wall because, I had cousins in America, for example, calling me up to tell me that they just invested in crypto, and it was like there was a point in time where 3 days straight, everyone I know was talking about crypto, or blogging, tweeting about it, or putting something on Instagram about it. So and sometimes you do. I mean, I never got close to investing, but you do sort of feel, am I missing out? I think a lot of people might experience that sort of fear of missing out. Luckily, I'm able to sort of ignore that. But recently, I have seen a lot of friends jumping into it just because they think it's moving up, and I saw that it went down 12% recently. But a lot of people still, like you said, it is a religion. A lot of people still believe that it's one for the future, which I guess it might be. Never say never. But yeah, just echoing your sentiments. I feel like I've been going crazy, but I'm the only one who hasn't jumped into it, because everyone else has.
I haven't either. So, if you have a FOMO, just give me a call. We can speak. Sorry, Breda, did you want to say something?
Oh, I was just agreeing as well. I think it was a show, the guy from Money Market, he was doing his weekly show the other day, and this lady came on the video, and she just looked like a normal lady, and she said, I've got some savings and I want to put it in Bitcoin. Never traded anything, obviously never done any research. She just wanted to put it on Bitcoin. And I think it is really that people just think they're missing out because everybody's talking about it, but the people that are actually looking at it, that's where the doubt comes in. And I'm in the same boat as you guys. Maybe it is something we're going to miss out on, but I don't really want to take that risk. I'd rather look at other things myself.
Yeah, absolutely. And we're going to talk about FOMO a little bit. And I think it's quite crazy if you think about it, because, we work hard for our money. You have to work each month for whatever money you make. And then you make these decisions wherein you're gambling 6 months of your, paycheck. Speculating with that is kind of scary. So let's move on. So again, looking at we looked at which were the top performance, but there were a lot of companies that did perform well, and obviously hospitality, oil and gas. So people are talking about, Norwegian and Carnival, whether people go back on cruises, oil companies we discussed, hotels, some banks that struggled, oil. So there are a lot of opportunities here. And with this, of course, you can do research into each of these companies. As I said, just make sure they can survive, they don't go bankrupt. And then, or you could buy ETFs across sectors, which might be a safer bet, especially if you can find or mutual funds, find someone who understands this space, a fund manager, and put your money there. Yeah. So with all of this going on, right? I mean, and all of us are kind of well-to-do and we're discussing markets, but we have to feel bad for the people who don't have things, right? And so this is kind of a trend line of where poverty, reduction in poverty globally was going, which was quite encouraging. And with COVID now, we're going back to where we were in 2015, 2016. So we've lost 4 or 5 years because of what has happened. And all of the government, stimulus and all of that should have helped this. And it might have to an extent, but it's not helped, right? It's the divide between the rich and the poor significantly increased, which is quite sad to see. And then if you're feeling sad about your own situation, if you want to see a really depressing report, there is this one. It's from worldbank.org about 2020 and what it's done to GDP, poverty we looked at, and a lot of other factors. You can see how lucky we are that we don't have some of these problems that people have faced. Yeah. But I mean, the markets have completely ignored any of this. So I mean, we spoke a little bit about this, right? But what led to the rally in 2020? So, and a couple of additional points came out yesterday, so we'll talk about that as well. But obviously, everyone knows it's printing cash, right? So central banks printing cash, it has to go somewhere. Where do people put money? Second is the central banks also buying securities, buying junk bonds, buying corporate bonds, which basically gives a message to the market saying, yes, if things go wrong, we're going to support you, which means it's a risk on. So everyone's buying everything. Also, one of the participants yesterday mentioned that with people sitting at home and, if they can't bet on a horse race, they need to put money somewhere. And so all of this money that was dependent on the physical world is now online. And, as you guys mentioned, people are opening broker accounts, 1 million, 5 million, 10 million broker accounts, depending on which country you're looking at last year. So all of this is kind of put, help the rally at the price level. And then FOMO we spoke of, right? I think FOMO is different for participants. So retail, we spoke about crypto. And I think the challenge with FOMO is, like on social media, is you only hear the positive stories. So, the fact that SoftBank's CEO lost 120 million in Bitcoin. Yes, it came on Bloomberg once, but it's not something people will talk about. Or someone who has lost money, in stocks or cryptos is not going to talk about it. So people are going to boast about, what they were lucky with. What I see in Malta a lot is people talking about how they could make risk-free return, day trading in crypto. And so, people going for these courses, and then, a lot of people come back saying they lost money doing this. So that's on the retail front. On asset managers, if you want, money from investors, you have to be in the market, because if you stay outside the market in cash, people are going to, your reputation is going to go down. People are going to withdraw your money. So there's nothing else you can do. So you need to do that. Now research houses is quite interesting. So if anyone tracks, what the banks, your Goldman Sachs, Morgan Stanley, all of these guys say about stocks, they have been caught out, right? Because the rally has happened, there are significantly more than targets that these companies would have set. And so now these companies have to revise targets. Again, something happened in 1999. We're seeing it now. So I'm going to just pause here if anyone had any thoughts or people think any other factors that could have affected the rally.
I saw it was, but a bit more of a question actually. So did you? So you were saying about the research houses. So I guess you're saying a similar thing happened in '99, where I guess some of the large ones, the big banks, made, I guess you'd call it, wrong predictions of where prices were going. So prices went much higher than what they said they would be. Is that what you're saying in terms of a comparison?
No. So let's say, for example, I'm a big bank and you came to me as a client and you said, where should I put your money? And last year I said, I think everything is overpriced. You shouldn't put money anywhere because Tesla has a target of 100, right? Now Tesla reaches 700 and this client calls me back, and several clients called me back to the bank saying, you had a target of 100, it's at 700. And then someone from senior management would be like, okay, guys, we're losing clients. We need to say we were wrong and revise all the targets up. So then they would look at all the stocks that they've given the targets on, and it goes up by 3x, 4x. And that's
Wow.
what. So I'm not saying they necessarily move the market, but I'm saying they react to the market, and then this cycle continues. The prices already moved, then these brokerages have to upgrade, and then the prices moves again. So that goes on until there's a catalyst which stops all of this, which is something that we would talk about as well.
Okay, cheers, thanks.
Cool. So yeah, just to continue all of this can give you an example. So RBC has been kind of bearish on Tesla, and I don't blame them. I think it was a very sensible thing. I don't think Tesla is worth what it is in price today. It's crazy. I mean, there was there's a slide on this later. Tesla's move on one day last week was more than the market capitalization of General Motors. Just one day, the gain from one day, which is crazy, right? I like Elon Musk. I love what he does, but he will have to conquer 300% market share to be able to justify just this valuation based on the cars he sells. Yes, maybe he adds batteries and those kind of things, but we need to see how the market how it converts into revenue and profits there. But in this case, what happened was RBC said, okay, the target was 339, now it's at 700. So they jumped the target, and they said this, right? Which is fine. I'm everyone makes mistakes and it's fine. But what is interesting is the rationale of why they're increasing the target. So they said Tesla's ability to take advantage of the stock price to raise capital. Okay. Now, if you've done a corporate finance course in your MBA or a basic finance course, you know this, right? Stock price goes up, company can, issue more shares at a high price, take that, it's less dilutive. But that's not necessarily something that was unknown, right? And it happens with every. So just because the price goes up and I can raise money doesn't mean the valuation should go up. So this was quite interesting on how they're trying to justify why they were wrong. Any thoughts? I know it's a lot of text here from anyone. Okay, but yeah, I mean, you get a sense of why I'm saying, you have to be careful about the research houses and their targets that they have, because I think someone came up with a target of $5,000 for Tesla, but before split, so it's it's probably double from here, 1,400 or something.
I guess Tesla's one of those stocks where there's a bit of similar to crypto. You got a massive following of people who absolutely love Elon Musk. They love the cars. They've been holding and probably will continue to hold and buy the stock, almost like a cult following around the organization as well. I went online and I saw people, as you said, literally making up reasons why the share price deserves to be where it is and why it should even be higher, batteries and whatnot. But these are still relatively unproven, from my point of view anyway.
But do you think that it's rather than Tesla, it's Elon Musk that they're buying into?
Yeah, it's a good question. I think my sense, and let me know what you guys think. So I think if you look at the market, there are, let's say, investors in Tesla, so hardcore believers in Elon Musk, and I'm one of those. I mean, I held Tesla stock for a long time until they bought SolarCity, which was a highly indebted company, and so I exited my position. So there is obviously that that market. But I mean, if you talk to some of the other people right now, when I look at forums, they probably don't even know Elon Musk. Yes, they've heard of Tesla. A lot of people don't even know how a Tesla car is different from other cars. And still they're putting in money. And I think it goes back to what Olu was mentioning earlier. It's the FOMO around the price movement. It's it's not about the car or it's the fact that my neighbor made 2 times or 3 times money in Tesla that might got me excited. That is at least my view. So my view is that it's more speculation rather than belief in Elon Musk. I remember when I was invested in Tesla, I was even looking at his eating habits. So Elon Musk loves a lot of steak, which is really bad for his heart, and he was putting on weight. So I was as crazy as that to kind of follow those kind of things. What do you guys think? Yeah.
I think that's hilarious.
So do I.
I mean, imagine if you invest in Tesla for Elon Musk and, something unfortunate happens to him, you pretty much lost your money. And it's a shameful investor saying, shameful investor saying that, because, if someone dies, you should not be worried about your own money. But people do this extent of, analysis. All right, let's move on. So Michael Burry, if you remember The Big Short, and the presentation is not about Tesla today, but it's a good kind of a proxy for the whole market, at least in certain sectors. So he's been shorting Tesla since December, and he's probably lost some money, and he's making his short bigger. Luckily for him, luckily or unlucky, I mean, if you look at The Big Short, when he shorted the housing market, it was a bit unorganized. It was not easy for him to exit if he wanted to. Now, obviously, it's all listed, so you can play with it. But it's very interesting what he's been doing with Tesla. So when Michael did this, and I was kind of not happy with Tesla with this valuation, I also jumped in with a short in December. And I actually wanted to buy puts, but the problem with buying puts was that because the volatility in the stock is so high, the puts were quite expensive. So I took a spot position and I took a short, and I had to square off. My stop loss got hit in about 2 weeks. So it wasn't an investment, it was a trading bet, but I was out in 2 weeks pretty much, just because it didn't work. But Michael Burry probably can afford to hold on to this for much longer. And hopefully we will see another movie, Big Short 2, at some point in the future. So bubbles, I mean, everyone knows, everyone's heard, everyone thinks that, they can get off at the top and time the market, which is the most trickiest thing, timing the market. And so anyone who's playing in the markets, if you're playing today, you should ask yourself, it's difficult to be an investor, except some of the, companies that we spoke about that have been affected significantly. So you should tell yourself that you're a trader. And if you're a trader, that means that you need to have stop losses. Some traders give you guaranteed stop losses, which is like an insurance policy. So keep those positions especially if you're, risking a lot of money. For other people, if you really have to be in the market, you could be in a systematic investment plan where you invest small amounts of money each month and do it for the next 20 years, then you would probably be fine. Yeah. Anyone wants to share their strategies, what they're doing now in the current scenario?
I mean, I've been I'm still in the market long term, and holding a lot of boring, really boring stocks that haven't even done much, to be honest with you. But I haven't been buying recently, just because I was doing a monthly investment plan, but I haven't been buying recently just because I felt that the prices were getting a bit out of hand. So I think I could pause buying for the time being and maybe wait till they're a bit more normal before I continue buying. But I'm definitely not actively buying anything in the market anyway. I mean, I'm always looking for decent companies that perhaps might be undervalued, but I'm not seeing a lot of that right now anyway.
Yeah, Breda, you wanted to say something? Okay. Yeah, I mean, I think, and I don't know if anyone's been through times where you've seen blood on the Wall Street, and I'm not talking about, a small dip for 10%, 20%, but when stocks are down 80%, 90%, 95%. I mean, I remember 2006, and I had and maybe I mentioned this before, I got admission into an MBA course that I really wanted. And I had all my money in the market because my strategy was, I was just out of university, and I said, okay, I'll put all my money in the market. By the time I go for my MBA, I'll have money, and which was doing fine, except in 2006, it was a big crash in May 2006, I remember. And my course started in September, and I had to square off stocks because I had to pay fees. It was in the UK. It was like crazy amount of money. And I stole stocks that were trading at 3 times, 4 times earnings because I had no choice, because I was fully in the market and I had to pay my fees. And so I've seen that kind of, decline, which probably makes me really, really scared to be in the market. But I can see if anyone started investing in the last 13 years, you haven't really seen the kind of declines that we've seen in the past. And I think this is why, and then a lot of it is because it's just the central banks have been supporting all throughout. Yeah. Anything else for anyone on this one? Sorry, you'll go on.
So also, do you have reason to believe that perhaps the central banks won't be able to support anymore, or they'll just stop?
It's a good question. And it was coming later in the presentation, and there is a lot being discussed about this. So, right. So the question is the catalyst, right? Who can stop all of this? So one is that printing money has some downsides, right? So it affects the US dollar, the value, and it could lead to inflation. Now, if it leads to inflation, then, and if it goes beyond the central bank's limit of inflation, then they have to start raising interest rates. And when the last time this happened, when interest rates were pretty stable, and then, the first time government talked, we saw a big crash. Because when interest rates goes up, just for anyone who's new, what it means is that companies have to pay more to borrow. And that means that affects the business, which affects the profits and all of that. Also, right now, because interest rates are low, people don't want to keep money idle in the bank. But let's say if the bank starts paying you 2% interest rate, then you might not invest in stocks. You might keep that money in the bank. So inflation is one, so something that we should monitor quite carefully. And the second thing is the national debt. So if US takes debt from China, or UK is printing money or takes debt, they will have to repay that debt. And UK, US, we are a bit lucky because US dollar is used around the world, so no one wants the US dollar to fall. But we've seen Argentinian peso, we've seen the smaller companies. So you could have a country defaulting, and that could be a contingent onto other countries. So I think I would look at these numbers, the national debt level and the inflation, as catalysts, and the banks will have to stop doing that. And then all of this, if you remember again, could lead to austerity that we saw after 2008, because governments now need to make this up. So they need to increase taxes, cut, social expenditure, all of those things. And any thoughts from anyone on this, on the catalyst, or what government central banks might have to do? Yeah. The morning crowd is always a little bit quieter than the evening one. We did discuss a lot of this yesterday. Okay, so Corey, are you still here? Yeah, so Corey is our in-house, US American. So, I requested him to talk a little bit about Joe Biden and the elections. So Corey, you want to take this over?
Yeah. Hey, yes, I'm still here. So, okay. Yeah. So it's a good, what you guys were just talking about are a lot of macro topics. It's a good segue into this section, because this will be a lot more about the macro side, really, than any individual stocks. Yeah. So if anyone is unaware, in the United States, Trump is leaving office next week. Joe Biden, unless he gets convicted this week of sedition, then he would be leaving earlier. But Joe Biden will be coming in next week, and then the Senate the Senate has a very thin Democratic majority. It's actually 50-50 right now, but the vice president gets to cast the tie-breaking vote. So essentially, the Senate is Democratic as well as the House of Representatives. So the Democratic agenda will have some impacts on the U.S. economy and therefore the global economy. So right now, healthcare is one of the most important factors. It's in the spotlight, of course, because of the pandemic, and infamously, the United States has a very expensive healthcare system, unlike a lot of the other developed countries. So Biden has come out to say that he is not for a Medicare for all plan, a single payer, as one would have in the UK or France or something like this, but he is interested in expanding the public option. So is anyone on the call, is anyone in the in insurance stocks or in the healthcare sector at all, in pharma? Yeah, go ahead. Oh,
Yeah, the closest I've got is Aviva, insurance wise.
sorry, say again?
I said the closest one I have to that is probably Aviva, but I don't think they're in America. I don't believe they're not in America.
Okay.
Anyway, anyway.
Yeah. Okay. Yeah, and then there's also on the pharmaceutical side, Biden has expressed support of importing drugs from other countries. So in the U.S., most people know that drug prices are extremely high. This gives a bit of a buffer to the pharmaceutical companies to be able to do more research and development. But if the consumer is able to import from other countries, usually Canada or another well-regulated market, there's potential to squeeze the pharmaceutical companies' profits and then perhaps delay some of the research and development. So is anyone in pharmaceuticals, either in the US or outside the US, or have any ETFs or anything? No, okay. So yeah, that's I think this will be something that'll be impacted in the near future under Biden and the Democratic administration. Also, for the economy, there's some interest in raising the minimum wage to $15 an hour. I think their main idea is to do this over several years. I think the federal minimum wage right now is around $7.85 or something like this. So going to 15 would effectively double it, and this would be very bad for a lot of the smaller businesses that have thin margins. And also there's an attempt to bring some manufacturing jobs or stabilize the manufacturing industry in the US. And there's a push to do a Made in America for government contracts. Of course, defense contractors and these kinds of companies already, the US government only buys from them, but for other other areas as well. So is anyone in the defense industry or have any exposure to someone like Lockheed Martin, or I think Raytheon is another one? Or any thoughts on these? Okay. Yeah, go ahead.
No, and I guess at one point I was looking at BAE Systems. They looked fairly, at one point it looked fairly decently priced. But I have noticed that there's been a lot more spend on like military contracts, and I think even the UK recently announced. I'm not sure if they're doing that because of maybe their relationship with America, but even they're going to maybe increase military spending in the coming years as well. So yeah, it's definitely something to look at.
Yeah. Okay. Is so in the UK, is there like a, what did I say? Is there some kind of minimum spending requirement for defense, a la NATO or something like this, or is it just they're interested in raising the amount spent on the military for other reasons, if you know?
Yeah, so I do believe, I think with NATO there was a certain percentage of, I think was it 3% of GDP that was it NATO allies sort of committed to spend, and recent years I think started with Obama and got even heavier with Trump. They were talking a lot about, American presidents were talking a lot about the European allies not meeting their requirements, or not meeting their side of the bargain in terms of military spending. So the UK had a UK military defense review last year or so, and announced that they were going to increase military spending to the highest point since the last 30 years. So a lot of UK stocks at that point kind of went up. Babcock and
Yeah, this is something important to look at, and I think yeah, Trump was pushing really hard for some of this defense spending increase under Biden. I think Biden wants to. He says he wants to prepare the relations with NATO, so perhaps there'll be a little bit of a reduction in spending, but of course we'll see how that goes. Mark, did you want to say something?
No, I'm just unmuting myself in case of.
Okay.
but thanks for asking, Corey.
Yeah, sure. So then the next thing on or one of the next big things on Biden's agenda is going to be China relations. Trump took a very unilateral stance towards China, and Biden is much more interested in doing some kind of multilateral approach, probably with the EU, and then also someone mentioned yesterday, which is a really good point, also probably India, which is a country that is, of course, the world's largest democracy, and also eager to counterbalance the rise of China. So I think there'll be a lot of activity in well, okay, I'll get to that in a second. So Biden wants to go with a more multilateral approach. Now, China, of course, on the other side is they're still moving ahead with their Belt and Road Initiative. There has been less interest because some of the larger projects have failed, but again, they're infrastructure projects, so they're kind of long term. And the Belt, if anyone on the call who doesn't know what the Belt and Road Initiative is, it's a large Chinese infrastructure investment initiative throughout Central Asia and Southeast Asia and Africa. And this, is anyone in emerging markets or have any ETFs in emerging markets or looking at anything in infrastructure projects or bonds for emerging markets? No. Yeah, so I mean, on this side, depending on how much the US, EU, and potentially India coalition works against China, we might see a reduction in Chinese investment in some of these emerging markets. Of course, someone else might come in as well. And then something that's more exciting in the Chinese US relation is the tech and climate technology Cold War. So on the tech side, we've seen the several American companies are simply banned from operating in China, including Facebook and a lot of the ones that are information technology or information companies, because the Chinese are interested in controlling information flows across their borders. But under Trump, there was also a lot of push to. It's been an escalation of the trade war. And some of the Chinese companies listed in the US have been delisted. So does anyone have any experience with that? I'm personally, I'm not really in the markets that much, which is why I'm taking this more macro view, but I would be interested in hearing if anyone is invested in Chinese companies that had been listed in the US, or if they have any thoughts about, how this will impact future equity issues in the US. Yeah, Josh. You raise your hand. I don't know how to. Yes.
Hi. I don't have any holding in those kind of companies, but I was looking at Alibaba, but kind of held back as a result of this. But they're kind of in trouble now as well, anyway, with the disappearance of Jack Ma.
Yeah. I think Jack maybe got on the wrong side of the CCP. And that's probably have somewhat of a chilling effect. Of course, the delisting in the U.S., which changed your behavior a bit, and then also the leaders of even huge companies in China, suddenly disappearing. As we were talking about earlier, when Ruzba is checking out the diet habits of Elon Musk. This is something, again, Jack Ma is famous and he's a huge personality in the company, and he's just disappeared. Yes, okay. And then on climate change, Biden is, of course, interested in rejoining the Paris Climate Accord. And I didn't know this, which is why I asked it to be put in the slide show here. He supports nuclear energy. So nuclear energy definitely has a controversial reputation, and there's a much stronger interest in green energy, renewable energy, and then just something that doesn't have pollution in general, which nuclear energy, of course, has nuclear waste. So I personally am I'm a proponent of nuclear energy, and I think that this is definitely one of his better policies. So does anyone have any exposure to utilities? Anyone looking at how nuclear might be entering into the energy mix, or any ideas on country-specific energy mixes? Because I think in Europe, Germany is phasing out nuclear energy, but then on the other hand, France they get like 70% or so of their energy from nuclear. China's continuing to build plenty of nuclear plants. So anyone have any thoughts on the future of nuclear? Okay, I mean, I have some thoughts. Yeah, go ahead. I saw someone, Josh.
I was going to say, I think it's definitely something that will be heavily political. You know, you see that, you kind of mentioned about France, which is why sort of Macron is being a bit more sympathetic towards Iran as a result of this.
Yeah, that's actually quite an interesting point, that because France has because of France's experience with nuclear energy and their positive view on it, they've been more they've been more supportive of Iran. Yeah. Okay. And talking about Iran, Joe Biden also wants to re-enter the Iran nuclear agreement. So this could be another boost for the nuclear sector. Yes. And then the final thing for Biden on climate change, he doesn't want to do a Green New Deal, which was largely an infrastructure project within the U.S. and putting a lot of money into improving the country's renewable energy resources, but he is interested in doing quite a heavy investment in green technology, which I think will, of course, this will boost the green energy sector in the U.S., but at the same time, there's quite a bit of very fierce competition from China. So this, how climate change and climate technology will be, of course, it'll be a point of contention between the U.S. and China. So then on student debt, the student debt, many people call it a crisis in the U.S. A lot of millennials hold huge amounts of student debt, which has really slowed down the traditional way, the traditional path through life, which is buying a home and having a family. So Biden is looking at making college free for families under $125,000, and he's also looking at expanding loan forgiveness. There's been calls for him to just straight up cancel student debt. And actually, I'd be interested to hear what some people think about how this might impact the finance industry. I think many of these calls they're not separating government-held student debt and bank-held student debt. There's been calls for Biden to eliminate student debt through executive order. He's already shot that idea down. But I would be interested to hear what you guys would think about how this might impact future lending, how it might impact for-profit education industry, how it might affect banks in general, and yeah, any thoughts on that? No. Is anyone holding any education stocks or any bonds or ETFs on education? Okay. Yes, so then the final point, which I think will definitely impact everyone on this call, since everyone is presumably an investor here, there's some interest in raising the capital gains tax. So at the moment, capital gains tax is 15% if it's held for more than 1 year, and this would be the target of increase. So a lot of the people are doing trading with cryptos, or some of the retail traders in Robinhood. If they're holding for less than 1 year, this probably won't affect them. But I'm guessing a lot of you guys, since this is the value investing club, do hold long term, and an increase in the capital gains tax would definitely impact your tax situation. So is anyone interested? Is anyone invested in the U.S. markets directly and have tax implications from the U.S. side, or is everyone invested as a non-resident?
Non-registered company. I have a non-registered company there, so I pay no taxes. The invoices come in, but I pay no taxes because it's the invoices go international, and I don't deliver services in the United States, so I don't get taxed there. Yeah.
Yeah. Okay. So this probably wouldn't wouldn't be affecting your business. I would imagine. Also, I think this is mostly for individuals.
Yeah. I do have a question. If we return to the colleges, don't you think that a lot of colleges will go bankrupt because many colleges are now big wastelands, and also because the online education is gaining ground? So colleges need to shift their attention, or?
Yeah, I agree. I don't know the exact number, but there are at least hundreds, potentially thousands of colleges in the U.S. There are a lot of colleges. The big name ones, right? Harvard, Yale, they have huge endowments. They'll be around. Also, they have name brand recognition. On the online side, though, yeah, I think a lot of colleges will have to start to move into this, at least offering a lot more courses. Before, some of them were a lot more reluctant. Whether they reduce their tuition for online courses or have the same is an interesting question. I think if they have the same, they would be able to actually boost some of their profits. Of course, most universities are nonprofit institutions, so I mean, obviously they have some motive to increase margins, but not really incentivized just to follow the profit margin, or their final profits.
Okay, thanks. Yeah, makes sense.
And hi guys, just to jump in, I'm not sure what bearing it has on the US market. I mean, there might be some, but I do recall in recent years some of the sort of larger universities, for example, here in England, having financial troubles, including was it UCL perhaps? UCL, I think they had some issues financially. And there's been maybe perhaps one or two others, and I imagine, as the gentleman before me rightly said, that coronavirus has made things a bit difficult for them. And then on top of that, a rise in organizations like Google and Amazon just doing direct courses for things like AWS, artificial learning, and a rise of online courses or specific courses basically done by large employers. I just wonder if that also will have an impact on universities, both here and perhaps even in America, in the coming years. If less people are inclined to get a college education anyway, or university education, and just go out and do a course in machine learning or stuff like that.
Yeah, of course. And yeah, I was just gonna say one more thing. On that point, yeah, and the companies that are offering it, like Google and Amazon, of course, these are the most sought after jobs. So if they're offering a course, it takes only a few months instead of 4 years, and it's significantly cheaper, and you want to work there, it makes a lot of sense to forego college and just go straight to the source. So yeah, I mean go ahead, Rizve.
So I was just going to add saying, I think with education is quite an interesting space, right? Because my time in the UK has taught me that education is used as a proxy to understand, especially when you're looking for your jobs early on in your career, especially in the UK and some of the other markets. So, or you study at Harvard or Oxford or all of that. And so I think there is the reputed ones, I think will suffer less. But you're right. I think some of the areas where, the less known universities, some of the courses where, the education is not that important, but like, for example, IT and programming, it's more your knowledge of the language rather than where you study that's important. So absolutely, I think, but I think again, it will have to be dependent on what services these education institutes offer. If that makes any sense.
Yeah, of course.
Yeah.
And I think also the social component is important. It'll be interesting to see how that this is moving away from economics, but the social component of getting into a network, especially at these elite schools, it'll be interesting to see how it'll play out in the online era when people aren't meeting after school and they're not meeting up, or seeing each other on campus and that kind of thing. So. Yeah. Okay. That's basically all I wanted to say about Biden in the U.S. political scene.
Thanks, Corey. Okay, so guys, only a few more things left. So usually I get a feedback saying, okay, we discuss a lot of macro stuff, but how do I analyze companies? And for some who have already done this for a while, this might be very basic. But what I do is usually I just open like a sheet and I'm trying to figure out some numbers. So a lot of people mainly look at market cap. I prefer to look at enterprise value because some of the companies are heavily debted. Now, technology doesn't take a lot of debt because there's a lot of risk. But if you were to look at, I don't know, car manufacturers or, more stable sectors, you would see debt. So I looked at enterprise value for some of these companies. And the reason I do is I like IPOs because typically IPOs, when they launch, are overpriced. And then over the period of 1 year, you see a reduction. So usually a good short play on the trading side. And almost all companies have gone through, even like Facebook and stuff. The few exceptions were Google, for example, which just continued to rise. It didn't really fall when it went through the IPO, but most companies do fall. However, last year, because of all the excess cash, these companies have continued to go up. There's been only not much reduction. Then I tried to kind of come up with revenue numbers, and this was quite tricky, right? Because what number do you take? Do you take a 2019 number, which is not reflective of 2020 coronavirus, or a 2020 number might be artificially low? So I had to use my judgment on what I think could be next year's number, and this could be completely off, but it gives me a kind of a sense just to work with the numbers. So, if I were doing this in more detail and actually putting money, I would do something called a sensitivity analysis, which say, okay, if my assumptions are wrong by 20%, what would these revenue numbers look like? And then earnings, I looked at EBITDA just to remove the impact of capital expenditure with depreciation and amortization. So this is more closer to the cash flow. I could have even taken free cash flow, but I'd have to put in more effort. So you can see that if you look at the numbers now, Tesla has recently become profitable. Still not a lot given where its market cap is. So if I compare enterprise value to revenue, it's at 31, which is quite expensive, and 202 in terms of EBITDA. Having said that, it's a mathematical thing. As their revenue jumps, their EBITDA will jump faster. So they might do, 10, for example, 2 years later. And if they do 10, then this from 200, it comes down to 80, which is still high, but it's not as high. And any questions on these metrics before I move on to the other companies?
I'm just curious. I'm quite often looking at similar stuff. Where do you usually get your numbers from? I think I'm at least trying to do this also at the larger scale, kind of find undervalued companies and so on. And it's I'm often actually struggling. I don't have access to, let's say, Bloomberg or FactSet as a retail investor. So what do you typically use?
Yeah, so just to give you a longer answer, at my company, City Falcon, we're trying to solve these problems as well. I don't have everything, we don't have everything ready, but which is the path we're taking. So I think for you, if you want to do it at a scalable level, you could use a stock screener. I personally use FinViz, which is free. So I use but there are loads of other tools, and more fintech companies are building it. For some of the other numbers, I'm using Yahoo Finance for now. But we are also at City Falcon, we are also populating these numbers. We'll have them soon. So Yahoo Finance, Finviz, Google Finance sometimes, yeah. But you're right, we don't have Bloomberg and FactSet, so a lot of the times we have to come up with numbers.
Yeah, I think I'm often using the same tools as you. I'm just finding them sometimes a bit limited, but
It is.
That's a curse of being a retail investor or interest.
Yes. But I mean, it gives you a sense. Even Bloomberg's not going to give you accurate numbers, so especially about the future. So, yeah. Anyone else?
No, I use Yahoo Finance, like you said. It's quite good. So.
Yeah, cool. Okay, so let's continue, right? So DoorDash is like Deliveroo in the US, and they make 2 billion in revenue. Thankfully, they are not as loss making as Deliveroo and other companies. So if you think about that business model, I think it's improved now. When Deliveroo started in London, they were burning cash on every delivery they were making. And with some of these businesses, with delivery, with Uber, with Airbnb, the sharing economy, you're seeing more local competition come in. And the other thing is, there are no switching cost. So if I'm using Uber and I come to Malta and I have a Bolt, for me to log on to Bolt is very easy. And then there's another provider that comes in, which gives me some discount. I'll move to that provider. So no one owns me, none of these companies. And this is a big challenge. If you're on Facebook and people are talking about moving from Facebook, WhatsApp to Signal or Telegram, there are switching costs. You have your network of your friends that you're going to lose. You have all your history of status updates and all of that. But in these companies, you don't. So DoorDash has been actually rallying because they're looking to expand. I think they talked about Japan and a few other markets. And so the valuation on an EV to revenue is very similar to Tesla, which says something, right? If you've seen how quickly Tesla is, the price action, but DoorDash is just listed. Of course, it's assuming that my number is correct, and maybe DoorDash will grow much faster than Tesla. Who knows? Airbnb, again, everyone knows about the issues they're facing because of the coronavirus. They do have a good revenue model, which sometimes can work against them, so they're expensive. But if I am traveling, I want a reputed company. So I think Airbnb generally, I would think there is some value in using them compared to local operators, at least for me personally. And then between Uber and Lyft, I mean, Uber has so many issues, right? So not only switching costs, plus the burn rate is crazy, the amount of money they burn. Also, I think the driverless car is not part of Uber anymore. Uber is a company which is listed, so you don't have advantage of that. So yet the valuation is not crazy. And this is primarily because of the loss that they're making. And the Lyft is, valued lower, but it's a much smaller company. So when you look at all of this, guys, do you feel like buying any of these companies or shorting any of these companies, or basically just wait and watch?
Well, I would definitely buy more of Tesla. I have Tesla myself, because I do think that they are gonna take over the space of taxis with their driverless vehicles, and also that they have a project that's coming out soon in regards to the batteries. So I think they will have a long-term road capability, and they are building 2 new factories. So I do see that stock rising from to few thousand. I do see 3,000-4,000 Tesla valuation stock. Not impossible, certainly not, and even more.
I think, Mark, you missed out on our initial conversation on Tesla we had at the start of the presentation.
Okay. Yeah, that's a pity. Yeah. What was the valuation of you?
I mean, most of us think it's superly overvalued. I wouldn't go close to it personally, but that's my opinion. So I'll share the deck with you. You can see some of the slides, and we will share the recording of this so you can review the discussion.
Yeah, great. Because I'm already a long time in Tesla itself.
Sure. You must have made good money. Congrats. Yeah.
Yeah, but I think indeed you're for it or you're against it. But yeah, okay. There's many opinions inside of it.
Of course. I mean, you have to see what you believe in.
Yeah,
Cool.
that's true.
Anyone else?
Sorry, go ahead.
Okay.
No, go on.
If I go back in regards to Tesla, have you combined the company Tesla with the Boeing company? Because both of two, they work together. So Tesla is going to use its vehicles in combination with the Boeing technology. So
Mark, maybe I think we've spoken a lot about Tesla today. And
okay.
I think we're close to finishing this session.
Yeah, no problem.
Yeah, but I think we'll share it out because it will just take a lot of discussion.
Yeah, no problem. I'm gonna check the recording.
Cool. Thanks, Mark.
No.
Olu, you wanted to say something?
Yeah, I guess similar. I mean, obviously you've heard of all of these companies. I haven't been close to investing on any of them. Because of, for example, Uber, how much money they spend, and I do feel like Uber are. I guess there is some sort of demand for their products, but they're in so many different things at so many different times. You never. I struggle to see what's going to take off, but at the same time, I do wonder. Well, if they are eventually able to get it right, they might end up doing quite well. I mean, I can't compare them to organizations like, for example, Netflix and some of these other ones who maybe did take a while for their sort of products to really kick off, but once they did, they did start making a bit of money. So there's a bit of me that always wonders, maybe it's worth taking a punt and just seeing where it goes in the future. But fundamentally, none of them sort of look to be investment worthy material, just at least not yet anyway.
Yeah, and Olu, just to kind of explain, you compare it to Netflix, which is interesting. I would just say, just think about, this is how I think about it, is what does Netflix own, right? So Netflix owns, to an extent, the history of the user, if you care about, what recommendation, but it holds a lot of exclusive content, which you cannot get anywhere else, right? So you're forced to use it. I mean, I had to sign up to Disney Plus because I had to see a show. Uber doesn't own anything. There's nothing that stops you from moving from Uber to someone else. And Uber will have to keep burning cash on marketing and promotions to hold on to you. So I think that's the difference.
Yeah.
Unless you think there is something, I mean, they just have a brand, which has got negative connotations in some markets now, unfortunately.
Yeah, definitely. And it doesn't seem, whether it's Bolt, whether it's Ola, there's always a new taxi firm. For example, in London, I think last couple of years there's been at least 2 or 3, and they'll offer you a voucher, 20 quid or £10 off your first ride, share it with your friends, and they'll take off for a bit until the prices end up being about the same anyway. So, and the Uber drivers themselves, the drivers themselves drive with every single company. So there's no USP at all, really, from
Exactly.
Uber's.
So companies like this, the way I like to play them, and I'm looking for opportunities. So, but again, this is only for people who can afford to take risk, who understand complicated products, is I would look to buy put options. So what I mean by put options is that I'm betting that the price will decline over a long-term period. When I say a long-term, I'm looking at 1 year, 2 years. And by using puts, I can, let's say the rally continues and, we have the rally for the next 5 years. My maximum loss is the premium that I pay on the put. So that's the strategy I would use. So I was looking for ways to do it. I haven't found a well-priced put yet, but when I do, I will probably short it. And so that's one of the things you could do. So I think Uber would be my top of the list with its valuation at 100 billion.
Yeah.
Okay, let's continue. So one of the companies I compare it to, and because as I said, I monitor IPOs quite closely, is Groupon. So if anyone remembers Groupon, really successful launch. I think everyone, very significant market share. But the problem was they were burning a lot of cash, right? A lot of marketing, a lot of amazing offers that they had to pay for. And once that fizzled out, the pretty much, the company is worth 10% of what it was in 2012. And this is the problem with, companies that burn a lot of cash. Once they go out of trend, they could crash pretty fast. And then there is, there are other examples in the market for this as well. So Bitcoin, guys, I had I had written an article that I'd shared with the group. If you want to, have a look at that. We've explained kind of, so Corey and I wrote it together. We explained, irrespective of whether you think you should buy or not, the things that you should consider before making those decisions. So have a look at that. It's on City Falcon blog. Actually, it's here. I had it somewhere. Yeah. So you go to blog.cityfalcon.com and you will see the whole article here. Very quickly, I also wanted to take the time just to show you guys that you could leverage, City Falcon, our platform. So this is what it looks like. Go to cityfalcon.com. It's free for you to get started. And for instance, when I'm looking at Apple, I can get news. What we're launching soon, which you can't see, it's only for internal use right now, is instead of you reading thousands of stories, whether you guys can see my screen, right? Just to be, yeah. Instead of seeing thousands of stories, we summarize the stories using machine learning. And so you don't have to read, all the thousands of stories that you see below. So this is going to be launching next month. It's a premium feature. So most of the site is free. Some features we charge, silver and gold subscription. Here you can also see sentiment. So for example, you can see how the sentiment for Apple has done over a period of time. You can see on 23rd of December, it was negative. And I think it was negative because Elon Musk was talking about Apple not buying Tesla. So anyway, you can scroll on the chart to see why it was negative. You can see a longer term period, which is kind of flat. So this is sentiment analysis. You could see the company filings. So if you care about, what the 10Ks, 8Ks, what they have, you can see that here. If you care about alternative data, so let's say new iPhone is launched, what are people saying on Trustpilot? Another example is charts. So what we offer is, let's say a longer term, let's say 3 months chart, and I want to see what happened on this particular date. So by just scrolling over it, I can see the top stories from that point in time. So it allows you to quickly move through and analyze stuff very quickly. And this is free as well. And then there is some more info if you want. And all of this, you can do across 300,000 topics, different asset classes, commodities, foreign exchange, topics like interest rates, if you care about, as I said, it could be one of the catalysts. And then we're going to soon launch private companies as well. So the idea is if you want to do due diligence in any of this. We also cover crypto if someone's interested. So just one single view wherein you can see all the cryptos, how they're performing. So this is our site. If you go onto the home page, simplest thing is either you search here for anything that you're interested in, or you go through our get started flow. Any questions on this on our site? And we have mobile apps as well, so if you want to use them. Okay, great. So let's get back to the presentation. So strategy for 2021, and I keep asking myself as well, and I do all three of these things is, when I'm doing investing, it is something that I'm holding for the long term. I don't care about daily price movements. It's majority of my portfolio. And then if it's trading, I would think about stop losses, a much smaller percentage of my portfolio. And then speculating, of course, like going to a casino, it's the money that you wouldn't cry about, or you wouldn't think about twice, if you lose it. And I think this distinction is what people forget. So when people start putting a lot of their portfolio in speculation, that's not a great strategy. Any thoughts on this from anyone?
Maybe just a question. I think one of the fairly recent topics have been these SPACs, like special purpose acquisition companies. Anyone has any thoughts on this, or has played around with those?
I have no idea. Sorry. Anyone else?
No, but you know, I do have a friend of mine. He was talking about SPACs. And I recently read an article where it wasn't anything positive on SPACs at all, to be honest with you. But I think it's going to be one of those things that we perhaps hear more about in the coming months. But I read something recently. I can't remember what the name of the article was, but it wasn't positive about SPACs. But on the other hand, a friend of mine who's been investing / speculating for some time was quite positive. I mentioned a few interesting ones that he was looking at.
Yeah, I haven't looked into it too much myself. I'm just noticing it's they're popping up more and more in the news, and it seems to be a trending thing. Whether it's going to be the next thing that crashes or really increases, I don't know.
Cool. All right, let's continue. What I have been doing personally, just to kind of give you a sense, and I think everyone's state is different. So mine, as I said, most of my money is in my business in City Falcon that I just demoed you. And so anytime I have cash, I deploy within the business. But what I've been doing is, and then I have to pay for my rent, and I have to make sure I don't speculate too much. So I've been buying short-term debt instruments or keeping cash. So these are, and these have done well, thankfully, in 2020. I'm originally from India, so I buy mutual funds there because I find the interest rate cycle is still downward. So we are not anywhere close to zero yet. And so as the interest rates could go down further, the bond prices could do well. And, some of them gave me like a 8 to 15% return last year, which was amazing with much lower risk. And then my equity portfolio is still stocks that I bought from, actually I do have some from 2003 as well, but these are stocks that I wouldn't sell like unless I'm really desperate for money. So that's been my strategy, and I might continue that in 2021 for now, unless we see a significant reduction in the prices and where valuation become exciting. I might look at that. The one stock that I'm tracking closely is Boeing, and the reason is that just to give you guys a sense, I short Boeing, and I was honestly quite lucky. I short Boeing at around this price, and this is where we had we had the market crash. No, actually not here. Sorry, maybe it was somewhere here. We had the unfortunate airlines crashing. We had management issues, and then the CEO was changed. And there were a lot of reports that Boeing wasn't taking security seriously. And so I'd short at this level. I squared off, and I was lucky with unfortunate things happened. And, I'm suffering from COVID myself right now, but COVID brought the price down. I squared it off and it went quite low, below 100. And now it's back here. But anyway, the price action is one thing, but valuation of the company for one of the two major manufacturers in the world, after with Airbus, 100 billion is not that expensive. Of course, there is some debt in the book, so you need to add that, but I don't think that's a lot. So it's something that I'm tracking, and I started tracking last week, and the unfortunate crash happened on Friday, I think. Though it was an old plane, and so the market hasn't reacted, so we lost a lot of lives. But it's one that I'm tracking at this point to actually buy at some point. Anyone else tracking the stock or has any views on this?
No, but I was looking at, but I stopped tracking it just because I had a baby and family life got a bit on top. But I was tracking it around the time of when coronavirus started to peak a little bit. Because you're right, it's Boeing, and it does. I think fundamentally, it's got very, 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 very high barriers to entry. Probably won't be disrupted easily anytime soon anyway. So it's probably maybe something that might be worth looking at again.
Yeah. Other thoughts?
Yeah, it's an interesting one, Rusby. I think obviously where we are with the pandemic and how aviation has really been hit, which looks like it's going to be kind of medium term, really, in terms of the commercial side of it. But the one thing about Boeing is the defense side of the company, which is obviously a big advantage and something that, yeah, longer term will probably stand taller than the commercial aviation bit, probably. So yeah, it's an interesting one to track. It'd be interesting to see how it does in the next few months while we're going through all of this.
Yeah. Also, I don't know, interestingly, I was reading the other day that Amazon started buying more planes at this time for obviously transportation. So
Yeah,
that's
actually,
another.
it's an interesting one with Amazon buying fleet and also all the freight type of like DHL and companies like that purchasing aircraft as well. So yeah, it's an interesting one.
Yeah. So I mean, I'll keep a track if anyone has any thoughts or, keep sharing with us. Okay, I think pretty much done from our side. So guys, as Warren Buffett says, and we keep hearing it, probably a lot of people don't care, but the times are when everyone's greedy. So this is the time to be careful. Yeah. Any questions, any thoughts, anything from anyone before we close?
Rosemary, just a quick question for me. We talked about tracking stock like Boeing and others, but I mean, do you have any advice in terms of the whole due diligence piece in terms of stocks? Is tracking all of this, but do you have any advice or any resources for kind of carrying out suitable and detailed due diligence on these stocks and the companies in terms of balance sheets and stuff like that? Just for probably a beginner, really.
It's a good question. I think so. Corey and I think we wrote an article on due diligence a long time back on our blog. So you could have a look at our blog, City Falcon blog.
Okay.
But I do agree that I think the way the market and the solutions have been out there, it's all been around algo trading and speculation and price movement and charts, that fundamental analysis has taken a backseat. And so we are building a solution to actually solve this problem ourselves, wherein imagine if you're picking up a stock, you would know exactly these are the 10 things I need to look at, and
Yeah.
you could rate that or not. So absolutely, we're working on that, and we've seen a gap as well with this. Right now, the way I work is that I have my own Excel sheets, and I just add things there, which is not the most productive way in 2021, I think, with all the technology around.
Yeah. Okay. I'll take a look at that blog.
Cool. Thanks. Anything from anyone else?
I think you mentioned in your own investment, you're investing also in debt funds in India. Are those something that non-Indian nationals can invest in? Anything that you are tracking on?
Yeah.
For others?
I was hoping no one would ask it, because I was supposed to do due diligence and then been quite busy with this whole other things, mainly the COVID virus. I need to do some research and I'll send that information. I think the general answer is it's not easy, but there are some mutual funds that allow you to do that. The only other challenge is they're a bit expensive on the management fee side. But let me do some research, and if not next time, I'll send it out in one of the emails.
Yeah, that'd be great. I've been looking at India once in a while, and anything that's not ADRs or GDRs seems to be always quite a hassle for non-Indians.
It is still not open. Yes, I agree. Yeah. Cool. All right. Thanks a lot, guys. Hope to see you guys at the next one. We'll try and do this once a month.
Thank you.
Yeah, but keep any thoughts coming through. If you guys want to present, let me know as well. We're always looking for someone to present. So thank you. Have a nice day. Bye-bye.
Thanks, guys.
Thank you. Bye.
Bye.